Welcome to Explain the Charts, where we break down the markets for you, one chart at a time. Today, September 10th, we're going to take a deep dive into XAUUSD, the gold spot to US dollar pair. With gold hitting new highs in recent weeks, there's a lot of excitement and volatility surrounding this market. But before we get into the technical analysis, let's first explore the current news and events that could be influencing the price action. Recent economic data, especially in the US, has been mixed, raising concerns about the health of the global economy. Traders are carefully monitoring inflation figures and interest rate decisions from central banks. The US Federal Reserve is expected to trim interest rates by 25 basis points next week, which could have a significant impact on the US dollar. A weaker US dollar is generally bullish for gold, as it makes the metal more affordable for buyers holding other currencies. On the other hand, the US dollar index has been strengthening in recent weeks, potentially indicating a risk-averse sentiment in the market. Traders are seeking safe haven assets like gold, but a stronger dollar could put downward pressure on gold prices. There are also geopolitical tensions to consider, with escalating conflicts in the Middle East adding to market uncertainty. Investors often turn to gold as a safe haven asset during times of global unrest. The potential for a September rate cut by the Fed has been lowered from 50 basis points to 25 basis points, but this is still a significant event that could affect gold prices. Now, let's transition to the charts and see what the technical indicators are telling us. First, we'll take a look at the daily chart to get an overall perspective on the trend. The daily chart reveals that gold prices have been on an upward trend for the past several weeks, with a series of higher highs and higher lows. This suggests that bulls are still in control, but there are some signs of potential consolidation ahead. We can see that gold prices have been trading above a bullish 20 simple moving average, SMA, indicating further upside potential. However, technical indicators like the Momentum and Relative Strength Index, RSI, lack directional strength, suggesting a potential shift towards consolidation. The 100 and 200 SMAs are climbing higher, but they remain below the current price level, limiting bearish potential for the time being. Now, let's zoom in on the 1-hour chart to see if there's any short-term momentum in the market. The 1-hour chart shows that gold prices have been experiencing modest gains throughout the day, but there's been some choppy trading as well. We can see that the price has been trading above its 20 and 100 SMAs, which is a bullish sign. However, technical indicators have turned flat, reflecting a lack of directional conviction in the market. The RSI indicator stands at 56, suggesting that bears have no interest in gold at this time. Let's move to the 15-minute chart and see if there are any short-term opportunities to look at. The 15-minute chart shows us more granular price action, and it seems like gold is consolidating within a narrow range for the past few hours. We're not seeing any significant breakout patterns or strong momentum on this time frame. This suggests that traders are taking a wait-and-see approach, waiting for clearer signals before taking any decisive action. Now, let's recap the key price levels and discuss potential future scenarios for XAUUSD. The daily chart indicates a bullish trend, but technical indicators suggest potential consolidation ahead. Support for XAUUSD is seen around $2,470 and $2,485, where prior support and resistance meet the bullish trendline. Resistance is expected at $2,500, which has been a significant psychological level and a barrier for gold prices. However, gold has shown resilience in the past, breaking through key resistance levels on several occasions. A break above $2,500 could open the door for further upside potential, potentially targeting the $2,550 level. However, for this to happen, we need to see a strong bullish momentum driven by positive economic news, a weaker US dollar, or escalating geopolitical tensions. On the other hand, if the US dollar continues to strengthen and economic data disappoints, gold prices could pull back to the $2,470 to $2,485 support zone. A break below this support zone could lead to a deeper correction, potentially targeting the $2,422 level, where we have prior support. However, this would require a more sustained weakening of the US dollar, a rise in risk appetite among investors, or a decrease in safe haven demand. Keep an eye on the upcoming US CPI data release, which is expected to be a significant market mover. If inflation figures show a further easing of price pressures, this could weaken the dollar and boost gold prices. Conversely, if inflation remains above the Fed's target, this could reinforce dollar strength and put downward pressure on gold. Keep an eye on the 1-hour and 15-minute charts for any short-term opportunities, but remember to always prioritize risk management and trade responsibly. The XAUUSD market is constantly evolving, so stay informed and vigilant.